HelpAge's work, particularly from the perspective of, how can governments, how can countries guarantee a basic level of income security for older people, a basic dignified level of income security. And one of the things that we've advocated for and talked a lot about in our policy work and focused on in quite a large degree over the years is social pensions, which are non-contributory, government-provided cash transfers pensions to older people. And one of the common questions we'd often hear in our work at the national level is, well, why would you provide a non-contributory benefit paid from government tax revenue to older people rather than provide better mechanisms for older people to save for themselves? So really, I'm going to look at this question today of what should be the role of the private pension companies in developing states from this perspective of to what extent can they deliver on this guarantee to a basic minimum income in old age. Okay, so I think a good place to start is really to look at the kind of core functions. What are the main functions of a pension system, and what are the main ones that concern us? And on the one hand, one clear function of a pension system is what is often described as consumption smoothing. And that's often, it's a fairly kind of technical, seemingly mysterious term for something which I think is actually quite simple, which is that at a period of one's life of working age, perhaps when an individual has more income, they reduce their consumption by saving so that they'll have more income and be able to consume more at a later stage of their life when their income would be lower. And a simple way that people do this is through contributory pensions, and that's what's really relevant what we're looking at in the discussion today. Now, in terms of roles, and roles is really the kind of question we had today. In terms of consumption smoothing, well, there's quite a wide range of players that can play this role. It could be on one extreme something completely managed by government. You can have contributory pension schemes that have no involvement with the private sector. The other extreme, they can be purely through a private sector company. And within this wide spectrum, there's a whole variety in between. But obviously, there are many people in all countries around the world who, for whatever reason, aren't able to put aside money during their kind of working life or during their middle age, if you put it like that, to be able to have a pension when they're older. And there are a variety of reasons for this: poverty, perhaps time spent out of the labour force caring for children, unemployment. And it's on this base that another kind of core function of a pension system, which governments provide to varying degrees, is what can be described as poverty alleviation, or providing a basic minimum income. And this is really what I described before in terms of provisions put in place to guarantee a basic minimum income to older people. So how can this be done? Well, through a variety of ways. In its simplest form, and in the way that HelpAge has discussed, it can be done through a social pension, so a non-contributory pension purely paid by government to older people along various different eligibility criteria, which vary from country to country. Similarly, and I won't go into this in great detail, it can be done actually via contributory pensions, especially where these are facilitated by government, various different ways of supporting these contributory pensions through government subsidy, etc. But whether or not, whichever mechanism it's done through, this function of a pension system can only ever really be done by government. Essentially, it's only government that will take the role of guaranteeing that all older people would have a basic income. Now, one area which I could potentially discuss in great detail, I'm not going to, it would be the question of the roles of different players within this consumption smoothing, this private saving role. However, that's a whole debate in itself, and I'm going to leave that to one side today. And instead, what I want to do is actually look in a sense at the relative role of consumption smoothing and poverty alleviation in the pension system, with two kind of key questions. I think the first one really being, to what extent can people save for themselves? And in particular, the second being, and to what extent can that private saving actually replace and provide an alternative to the kind of poverty alleviation function that the government plays? So to begin with, I think a useful piece of evidence to start with is actually look at, well, what's the coverage of pensions today? How many people in different countries around the world, and particularly developing countries, are contributing to pensions? And what this chart shows is the coverage of pensions from the perspective of how many people, what percentage of the economically active population are contributing to a pension, and in this case in Latin America. And I chose Latin America for a couple of reasons. Firstly, there's very good data. Secondly, the countries represent slightly less poorer countries. They're generally middle income, so they're ones with slightly greater capacity, you could say, amongst the population to save, relatively amongst developing countries. And the third one is actually there's been quite a range of innovations over the last decades in terms of the pension system, contributory pensions, which have also, as many of you I'm sure will know, included many different experiments with the private sector and private pensions. When you actually look at the coverage rates across Latin America, what you tend to see is that over half the countries there, fewer than 30% of the population are actually contributing to any kind of pension. And even beyond that, there are only a very few countries where over 50% of the population are contributing to the pension, to any kind of pension. And one thing worth noting is that actually some of the ones that do particularly well here in terms of Brazil, Uruguay, and Argentina are some of those countries that, as I alluded to before, provide significant government subsidy to the contributory system, which in a sense show that these aren't perfect examples of people saving for themselves, you put it like that. So actually the picture you see is really, in most developing countries in Latin America, only a minority of people are able to contribute. And if you look into Africa and Asia, if anything, the picture is slightly more disheartening. In Africa, fewer than 10% of the population the working age population tend to be contributing to a pension. And in Asia, perhaps somewhere between 10 and 20% in the lower middle income countries, for example. So really the question is, well, why is this the case? And one clear factor at play here is certainly informality. That is, large proportions of the population in developing countries are working outside of the formal sector, where they don't have a contract, where work is irregular and unreliable, which creates challenges to saving in a pension scheme. And this chart essentially shows, and you can look at it in your own time with the PDF presentation, which I believe will be shared, that as the level of formality within an economy grows, so does the level of contribution to a pension. So this is a clear factor in at least a clear correlation in the question of whether people are contributing or not to pensions. Now, this has led some people to the conclusion that therefore one of the primary ways of dealing with this issue and overcoming the fact essentially that really diagnosing the issue as primarily that people within the informal sector don't have access to pension schemes that exist in the formal sector. With that diagnosis, there's been a lot of effort and a lot of emphasis globally on how to create innovative schemes, including micropensions and others, that can provide alternatives and options for people in the informal sector to save in old age. And I think that that's clearly a very important factor within the question of the cause behind people not contributing. However, it slightly ignores to some extent the fact that informality itself is itself highly correlated with some deeper issues of poverty and vulnerability, which create a real barrier to people saving in old age, simply because they don't have enough money to put aside. So to illustrate this point, I thought I'd pick on an example from a real voluntary pension scheme, which was designed for the informal sector, which I'm not sure if it's called a micropension as such, but follows basically very similar principles. And I believe there is a micropension in Kenya which has almost exactly the same parameters. And so this scheme, called the Mbao pension scheme, is one that was set up in collaboration and kind of with the stewardship of the Retirement Benefits Authority. And if I have the quote here, it's sold on the basis that it provides an opportunity to save for a comfortable retirement in an easy, affordable, and convenient way. So let's actually have a look at some of the kind of parameters and what's expected. As you can see by the logo in the top right, the number 20 is emphasized, which is the contribution rate, 20 Kenyan shillings, which is expected from participants to contribute every day at a very minimal. So for those who aren't familiar with the Kenyan currency, that's about 25 US dollar cents. So if that's the contribution, what kind of pension could people reasonably expect? Obviously, that would depend significantly on the years of contribution, how long people leave it there, how much it will accrue through investment, and a whole range of other factors. and for example, when a person will decide to withdraw that pension for their old age. But it's possible to use a few fairly kind of fair consumptions to come up with a rough estimate, which we've done just through some of our own kind of rough calculations, which don't go into the great depth of the issue, but give a rough idea. So what we've assumed here is that if an individual was to contribute for 40 years, that 20 Kenyan shillings every day of their life for 40 years, and then at the age of 65, they were to decide to take that pension out and turn it into an annuity. And through a very kind of simple equation, we just use the life expectancy in Kenya to calculate that annuity. And then again, a very simple assumption that benefits would keep pace with inflation. Now that benefit in today's prices would come out as roughly 1,800, a bit under 2,000 Kenyan shillings, which is around $22 US. Now, conveniently, as we're looking at the question of income security in old age, keeping people out of poverty, that benefit is actually equal almost perfectly to the extreme poverty rate, according to the kind of World Bank definition, the $1.25 a day, which they define as the dollar a day poverty line. So in many respects, that benefit, if an individual was able to save, would do quite well. On the other hand, it is worth putting in a bit of perspective in the Kenyan context, that this $22 is actually slightly less than the current social pension, which is in place there. Although this social pension at the time, for the time being, only goes to around 5% of older people, so still it isn't supporting the majority. So then the question really is, on the basis of these parameters, who do we feel, what's the kind of audience or market for a pension like this in Kenya? And there are various ways of looking at this, but one useful way is actually to look at the poverty rates in Kenya. So I mentioned before that the extreme poverty rate as defined by the World Bank is this dollar a day, or modified to $1.25 a day. That's purchasing power parity. Now actually in Kenya, 43% of the population live below that poverty line. And when you actually place that in relation to the 20 Kenyan shillings a day, what you find is that contribution, though seemingly small, just 24 cents in US dollars, about 41 cents in PPP dollars, would be around a third of of an individual's expenditure, which is something that is clearly in the context of families which are likely to be facing significant issues in terms of food security, providing the basics for their families, would be completely unrealistic to spend on pension saving in a consistent way for 40 years, as we've described above. And 43% of the population, as I think I mentioned, live below that poverty line. So that's a significant portion of the Kenyan population, as it was in 2005 when this data was collected. But the issue doesn't quite stop there. And what we can do is look at slightly higher poverty lines. So in this case, the $2 a day poverty line. And in Kenya, around this is what's generally defined again by the bank as a kind of moderate poverty line, and is not dissimilar to some of the kind of vulnerability to poverty line measures in Kenya. But what you find there is still 67% of the population live below that line. Now, for that population, for them, some of those closer to that poverty line, the contribution of 20 Kenyan shillings a day would be about a fifth of their expenditure, which brings us slightly closer to some of the contribution rates which are expected in many European pensions, but still slightly higher, and one can imagine would be potentially very, very, very challenging for a large portion of those households who may well have other places which it may be better to spend that income, for example, children's education and other areas of expenditure. And just to emphasize that while Kenya is perhaps an extreme example where we're looking at 70% of the population in a position where it would be very unlikely they could make consistent pension savings, it's also something that extends to many middle-income countries. And what this chart basically shows is that while in Indonesia only around 13% of the population live below this extreme poverty line, or a similar one which is their $1.2 PPP, actually around 50% live below this $2 a day poverty line. So we're still seeing a large proportion of the population really going to struggle to contribute to pensions. So where does this leave us? Well, in a sense, this helps to explain why so many countries around the world, especially in the last decade or so, have recognized this trend and started to introduce social non-contributory pensions, really seeing that it can't be left to contributory pensions alone, and this consumption smoothing function of a pension system to ensure that people don't live below, to ensure that people have income security in old age. What this map shows, when you can find it on our website and explore it in greater detail, it's just the countries that have social pensions, with the darker ones showing those with higher coverage social pensions, and the lighter coloured ones those with lower coverage ones. And I'll leave you to explore that yourselves. But I think what it does demonstrate is this increasingly popular approach or popular component of pension systems is one that's increasingly being seen as affordable. And I think one interesting thing to remember is it doesn't just deliver on the fact of ensuring income security for older people, but actually what's been found across the board is it helps to reduce poverty in households as a whole, which by extension could even potentially increase the capacity of other generations to be able to start contributing to pensions. So in terms of where this leaves us in terms of the pension system, should we therefore conclude the contributory pensions and the consumption smoothing, which is where the private sector has a role, have no place and shouldn't be invested in developing countries? I don't think so at all. As countries develop and as the kind of audience and market increases for contributory pensions, there's going to be increasing opportunities, and it's not too early to start. But as I say, I think we would emphasize that if the question is providing a basic income security, then a focus really needs to be put on a minimum basic income for older people provided by government. And the way we'd see this and the model we're increasingly looking at, that I think incorporates both the contributory and the non-contributory elements of a system and the different functions, really revolves around what we call a citizen's pension, which is really the proposal for lower middle income countries. A priority should be to extend a basic minimum non-contributory pension that covers all or most older people, primarily on the basis of age and residency and citizenship. And that on top of this, as the market, as we're saying, and as the capacity to save for contributory pensions increases, that coverage can be extended. So as you see here, this simple illustration attempts to show coverage at the bottom from poor to rich and pension income. Here we have a citizen's pension that would aim to cover almost all older people, and then anything that people saved in addition through micropension, through other saving, would be supplementary. And this, as I say, it could be public, it could be private, it could be government, it could be in the private sector, and that's a debate in itself. But I think the idea here, one of the benefits is that, firstly, as I say, any additional income would be supplementary to a basic pension. Also, another potential opportunity is that as contributory coverage increases, and this diagram here shows a country that may have particularly high contributory coverage, there may be potential for introducing what people call an affluence test, which would be to reduce the spending of the citizen's pension on richer older people, those who have larger pensions themselves, which can be done a number of ways. And in that sense, as the contributory systems start to develop, money can start to be clawed back within that system. And just to make a point of this whole framework fits very clearly, and we just read a short brief about it, with the concept of a social protection floor, which is gaining significant interest and support internationally, that a priority should be around providing a basic minimum income to people across their whole life course, of which a citizen's pension would be a component. So in terms of conclusions, returning to the question, what should be the role of private companies in developing states? Well, the first question, is there a role? And as I described initially, certainly there's a role. Within the question of consumption smoothing and private saving, there's a clear role for the private sector in this. Then turning to what should be the nature of this role, I think a starting point has to be, we need to be realistic about the extent to which people can adequately save for themselves. Yes, they may be able to put a little bit aside for themselves, and that may be valuable. In the place of a floor, it may be supplementary, and without a floor, well, it's something. But we do have to be realistic that it's unlikely that for the majority of people, private saving will provide an alternative to a government-provided floor citizen's pension, at least in the short to medium term. Okay, so those, I think that's largely coming to the end. What I'd say is, if you want to see some of our other thoughts about citizens' pensions and the like, we've just done a briefing which you can find on our website, which is www.pensionwatch.net. I realise I didn't leave the link in here, but I'll dig it up in the next few minutes and post it on the board. Anyway, thank you very much.
Okay, thank you so much for a great presentation, Charles. There's a couple of questions. Mark Williams, I believe, had a question about this slide. Where does the orange of Australia fit into the spectrum you have here?
Yeah, I think I noticed that as I presented. I think the orange of Australia is simply because when I took a screenshot, my mouse, where the cursor was over Australia, which makes it turn a different color. Sorry. So actually, Australia would be in this case the same color as it should be the same color as Brazil and Bolivia and Canada in the sense that there's a high coverage social pension that covers the majority of people. That's just a technical blip there.
Okay, that's no problem. I also have a question from Haskell Van Dalen, who would like to know where do you see and what are the possible options for kind of a public-private partnership to do with pensions?
Possible options for. Okay. Well, I guess on one hand, one question relates to public-private partnership in relation to pension saving, so strictly relating to pensions companies. I'd say that isn't our area of expertise, but my sense is that there's a real diversity around the different kinds of public-private partnerships which have existed across the world, including in OECD countries, where often for example, an individual will contribute through a kind of government system, but they'll actually be choosing from a set of private funds. I know that something like that exists in Sweden. There's a new scheme in the UK that has something along those lines, and many of the schemes in Latin America, including Chile, I think have a fairly similar model. Yeah, I'd say that side isn't so much my expertise to say which models are better and which models are worse. Another thing I think perhaps to kind of flag in terms of public-private partnership is that while on the kind of non-contributory side, the funding of those systems will essentially have to be in the hands of government, that doesn't close the door for public-private partnerships. So, for example, one of the things that you're seeing a lot of in a number of African countries, for example, Uganda, where they have a pilot for a social pension there, is that actually one of the big challenges they found is how to reach rural areas and how to get a pension to some of these very, very remote areas of the country where there simply isn't infrastructure, there are no post offices. And what they've been using is mobile phone system, and they have a private-public partnership with MTN, which is the mobile phone company in that country, one of the mobile phone companies in that country, to do so. So I think similarly there are other opportunities in terms of management information systems, registration for public-private partnerships within the framework that essentially the transfers themselves will have to be funded by government with a non-contributory pension.
Okay, I think we have a small follow-up question on the same topic, again from Mark Williams. How can we, or my company, get involved? As in, what would the public sector need from the private sector, I assume, in order for it to work?
In terms of, I mean, is that in terms of the more the pension company side or the broader private sector company side, I guess would be my question back.
The pension company side.
Yeah, as I say, I'd say probably yourselves at the pension development work might be in a better position to talk about the kind of opportunities on the contributory side. As I say, yeah, our expertise on that area is perhaps a little less substantial. So yeah, but I'm sure yourselves might have some thoughts on that.
Yeah, we do. In general, I think what would be most useful is expertise, obviously, knowledge, advice. From our point of view, definitely a public-private partnership is the most preferable option. If you're involved in any kind of project, we always experience the best projects are the ones that have the most people involved, have the most expertise involved. Certainly, one of the interesting things that's come out from our work with private companies with micropensions is that it's also beneficial for private companies because they have nicely explained to me that the pension systems are now so complicated that actually it would be beneficial for them to go back to basics and to learn from kind of starting a pension system again through micropensions. So yeah, that's briefly touching on the subject of I think that's how best private pension companies can help. And one last question is from Caroline van Dulleman, is how do you see the link with non-contributory pensions and a pension for poor people only?
Okay. So, I mean, sorry, table. Well, I guess in a sense, I'd say non-contributory pension, a pension for poor people only would be a type of non-contributory pension. So really, to me, that seems to touch on the question, should a non-contributory pension that I kind of described above be a citizen's pension that goes to all people, or should we only target a social pension at the very poorest people? And that goes into a whole bigger debate on targeting. But one of the reasons that we talk a lot about citizens' pensions is partly because of the experience we have on the major challenges of targeting the poor. Which really results in, I mean, there are a number of angles to this. I think an important starting point is that in most developing countries, and actually in more developed countries as well, any attempt to target the poorest 20%, the poorest 30% of a population, let's say the poorest 30% of older people, will result in significant exclusion errors, which will result in many of those people missing out. And across most developing countries, we tend to see that those exclusion errors, the proportion of people who are targeted but miss out, is usually, often around half, and that's pretty good performance, if that's the case. So targeting very narrowly at the poor, we tend to find doesn't have particularly good results for the poor, which is why we advocate for more broad-based style of a citizen pension that aims to give an entitlement that perhaps, with richer pensioners, people earning more money, you can look at reducing that entitlement to some degree. And beyond the question of targeting efficiency, how many people with a non-contributory pension lose out if you target it very narrowly at the poor. There are a whole range of issues. There are political issues. That heavily poverty-targeted programs tend not to be particularly politically popular. Similar issues of stigma, which I think will resonate with many of the debates that people are familiar with at a European level. And there, another very important issue, I think, for this debate is the question of potential perverse incentives. If you look at that question we looked at in Kenya, for example, so somebody who would have worked their whole life, contributed for 40 years to get their 1,850 shillings. What happens if you then say, well, only the poor, or the poorest 50%, or people who haven't contributed to pensions can get 2,000 shillings? That creates a massive perverse incentive for somebody to spend all of their life giving, their 20 Kenyan shillings a day if they're only going to be excluded from another program. And that's of significant concern in pension programs, and it's why the Chileans reformed their social pension to make it more universal, and the UK is actually doing something relatively similar. Caroline has added "and corruption," and yes, that's one of the. I've done a whole presentations on poverty targeting of social pensions, but that's certainly one of the issues, and one of the driving factors for the kind of significant exclusion errors. I'll probably better leave it there unless anyone has any other questions.
Okay, thanks so much, Charles. I do believe that time is slightly running out, so I think it would be best if we move on to Alexandra. Thank you for such a great presentation, very knowledgeable. As Charles touched on at the end of the webinar, all the presentations will be available to download. So if you haven't quite got all the information that you need, you can get it at the end. Also, email addresses will be exchanged. So again, if you have any further questions for Charles or the Pension Development Network or Alexandra at the end, you can happily email us and we will reply. Okay, Charles, if you can just turn off your webcam and microphone. Thank you. And we'll move on to Alexandra. Alexandra, if you could turn on your microphone and webcam. If you can just...
Thank you. I'll do my best for sure. So, good day, everyone. I'm Alexandra, and I work for WebCamif, and we developed the pilot project of micropensions in Guatemala, Honduras, and Nicaragua. And I'm gonna try to give you the site, like
Alexandra,
yeah.
could you just please lower your audio slightly? Or if you just talk slightly quieter, that will also do the trick. I think you've just muted your microphone. So if you go to the top left.
Hello, is it better? Okay. You're welcome. So I'm going to try to give you the insight of why we decided to develop this new product to our clients. So let's begin then. First of all, I want to start with how much coverage has the national system between Honduras, Nicaragua, and Honduras. That it's like between those three countries is just a little bit 13% of the coverage of the population. This means that over 80% of the population doesn't have access to this product or to the system of pensions. So it means like a lot of people that is in an informal market, they don't have access to a pension to retire in their senior age. So the three main points that I want to discuss today is first of all, the national system, what a little bit of facts and the reality of it, and the institutions as RedCamif, how do we work, and why we decided to develop this new product, and the pensions law on this in these three countries. So first of all, the national system, the first things to really notice is the limited access that they have in the countries. They don't have it. This is because of the budget, first of all, and the points of distributions in this product. Obviously, they just cover the economically active population. That means that the unemployed population, they don't have access to it. And the public spending, as I told you, it's really low, like is under $3 per capita. That means like it's pretty much, it's really low. And of course, the long periods of payments. This has been changing a lot the last couple of years. It used to be 12 years of continuous payments, and now it's between like it's almost up to 20 years of payment to get the right of a pension. So it's a long period of time, and most of the people doesn't like. Well, I'm gonna explain this a little bit later. So this means that unemployment people that they don't have access to it, obviously, like the low coverage of the national system, they don't have a lot of coverage, and the distrust of the system. Why there is a distrust of the system? Well, actually, they have been involved with a lot of scandals. Like they have been robberies for over 20 million quetzales. That's a lot. And this means like the people doesn't trust to the system. They don't trust that they will get back their money in the pension. So they don't really trust the system. And of course, the national system has an optional program for the people that is in the informal market. But even though that is a optional program, first of all, it's really tricky to get into it. Like they ask for a lot of requirements that usually people cannot accomplish. So it's really hard for them to get into the programs, and the lack of information. And this is tied to the distrust to the system, because they don't trust the system. They prefer not to even look for another options with the national system. And of course, the politics of the system. This means like, for example, Nicaragua, when they agreed to the peace, they agreed to add all the people from the guerrilla to the national system without any kind of payment. So this means that the fund trust, it gets smaller even, and the demand is really bigger. It's bigger. So this means like adding all these points, it means like the system is ineffective. So now I want to talk to you about the institutions. Why? And our main goal as Red Camif is to cover our 1 million clients. We right now between the region we have 1 million clients. So that's our main goal. Why they would decide to do this kind of project? Well, actually, it was because of the reasons that I gave you before. Because our clients are micro entrepreneurs, they work in the informal market. So this means like they don't have access, and it's real. Our institutions have the goal to help our people, our clients, our micro entrepreneurs. So this is why. And another reason is because we decided to do this program is the policies, because in the institutions we have the policies that we can give you microcredits until you're 70 years. So but you should, like, of course, we want you to keep you as our clients. So we want to help them to have a really nice senior age. So this is the reason that we developed this product. And of course, this is another, like, we have been developing micro insurance and micro pensions to fulfill the necessities of our clients, that they're, as Charles says, There are a lot of necessities of our clients. And I think that our biggest asset that the national system doesn't have is our reputations. That is the biggest asset that we have, because most of our clients have been our clients for over 10 years. There are clients that they have been clients since day one, so it means like over 25 years. So this is our main asset. And I want to talk to you about the private programs. Right now, we don't have any kind of laws. This means like most of the banks, and I'm going to talk to you in this slide about Guatemala specifically. We don't have any kind of laws about pensions. Most of the banks, they provide like a saving program with a better feed, but it's not a pension. It's just a saving account that it has a better, like it has better yields, but it's not a pension. It's not gonna last until your life term, right? And the coverage, the banks usually are in the main cities, not like our institutions that are in the regions that there is more necessity of this kind of products. So I'm gonna try to we can compare. Right now we are gonna try to compare every single one of the systems that I talked about, and I hope that it's helpful. So as Red Camif, we already have our clients. So we have the trust of our clients, and this means that it's easier for us to get them involved in the pension program. Our pension program one of the requirements is that they have to pay at least 5 years continuously, so they can have access to the pension, or they can withdraw they can retire the money of the program, or they can continue. It all depends. And of course, it's a lifetime pension. With the private programs, with the banks, with the private banks, they are clients of the banks. It's a saving program, and they have one of the stipulations is that it's 5 years at least payments to, and it's just a limit saving account. What happened to them when they don't have any more money in the account? They don't have any more money to keep working on their micro companies or anything else. And with the national system, with the normal program, you have to be in the formal economy. You have to work in a private company. You have to pay for up to 20 years to get a lifetime pension. So you can see like this is the huge difference between the normal program and Red Camif. Like we have different, like it's a huge difference, like 5 years to 20 years. And what happens if one client is 60 or 50? They cannot reach up to 20 years of payments without any interruption. And the optional program, you have to have a steady job and a steady incomes, and this is one of the requirements that is really hard to our clients to reach, because even though they are micro entrepreneurs and they have their own companies, they don't have a steady job, steady incomes. I'm sorry. So this is another one, like, really big difference. And of course, another requirement is that, and the lack of information. And again, 20 years of payments, but it is a lifetime pension. So as you can see, we try to custom made the product to our clients. And one of the, like, the main question that I have been asked is if we can be like, this project can be replicated. And yes, it can be. It all depends on these main essential items. First of all, know your market and know your client. This is the main one of the main points. You have to know your market and your client, and of course the right structure of your organization and your project. This is really important. Have the right structure in your institution and the project, and of course the coverage of your institution. If it's near to a client, it's easier to sell the product. And of course, a custom made product, you have to know what your client's necessities are, and this is why we custom made our product, to satisfy or try to satisfy the need of our clients. And of course, our clear policies. This is another one. Well, pretty much every single of these points are really important, but this is another one really important. Policies and structures are really important to be clear. And of course, reputation. If your institution has a really nice, a really good, and then a really solid reputation, it is easier to sell a product that the client needs. So thank you, and I'm here for your questions.
Okay, thank you so much, Alexandra. One of the questions I think I would have would be, do you see any possible future collaboration with the government? Obviously, your micropensions aim for around about 1 million people. So should it increase or reach the target, do you see any possible
That's a good question. In the near future, I think that we are, as an institution, we will try to avoid to work with the government until they work in their transparency and their policies. Because it is really hard to sell a product that it's like it's being like, by the client, it seems like a little bit shady, and with the government involved, that will be even harder to sell. So I think in the near future, it would be like, we have to wait until the government works in the policies and the transparency. Yeah.
Okay, great. And a follow-up question would be, from your experience,
About the distrust, or okay, so that's a really good question. I think it's more about Central America, because we have been in a lot of internal conflict. So it means we need to restructure our laws and our systems so they can be a lot of transparency. But I think in South America, they are doing well about the transparency on their system. So I think it It is mainly in Central America.
Okay, great. Thank you. Sorry, I'm just reading Hasko's questions. Hasko would like to know, Luxembourg is participating in your micropension
Yes.
scheme. Are there no other EU countries contributing to your scheme? And he also says that there has been a Latin America project.
Okay. Well, yeah, Luxembourg it's working with us, and of course, P&D they have been working with us with knowledge support. So it's been, I guess that means like Luxembourg, the Netherlands are working with us. And let me see, what's the last question? There has been a little.
The last question was, Hasko says there's been a Latin American project of the EU for social inclusion. He would like to know, have you heard anything about it?
No.
And is this prevalent in Guatemala?
To be honest, no, I haven't heard of it.
That's no problem. Okay, I think that concludes the webinar. Alexandra, thank you so much for your presentation. If you could just turn off your microphone and webcam. Okay, thank you to everybody that's attended, and thank you kindly for giving up your hour. My huge thanks have to go to Charles from HelpAge for his effort and time, to Alexandra from Red Camif. Again, both brilliant presentations, and we're very lucky to be able to work with you. And lastly, an enormous thanks has to go to Francisca Franks from X-Webinar, whose continued help and support. Without that, none of this would ever be possible. So my heartfelt thanks goes to her. In the bottom left-hand corner, you will see 3 presentations, one introducing the Pension Development Network, one from Charles and one from Alexandra. If you click on them, they can be downloaded. Again, on the right-hand side, there is the websites of Pension Development Network, HelpAge International, and Red Camif. And also I include the email addresses in the bottom right-hand corner as well. Let me just get those up for you.